Good afternoon and welcome back to the South Carolina Public Service Commission. We are here in docket number 2025-65E for public interviews as to storm securitization proceedings. All commissioners are present in the hearing room. Gentlemen, before we begin, have you seen what we've done so far online or heard the earlier instructions?
No, we were traveling here.
Okay, then we will repeat that. General Counsel Hill, would you please explain the proceeding as we go forward?
Yes, sir. Thank you, Mr. Chairman. This is the special business meeting of the commission as noticed by the clerk. There is only one item on the agenda, and it relates to docket number 2025-65E, and it concerns the public interviews of those entities and persons who responded to the request for proposal. On May 22nd, 2025, the commission instructed its staff in Commission Order 2025-316 to issue a request for proposal for the selection of a qualified independent third party as required by South Carolina law. The term qualified independent third party means a person or entity with relevant expertise in accounting, finance, or utility regulation, sufficient to make the professional judgments necessary to certify compliance as required by Section 58-27-1110, subsection C6A, with regard to securitization. The qualified independent third party shall be designated and retained by the commission to participate in a pre-bond issuance review process established by the commission pursuant to South Carolina law and pursuant to the commission's order if an order is issued. The role and responsibilities of the qualified independent third party are further detailed in Section 58-27-1110 C6. The qualified independent third party, or QTIP, will provide certification of compliance with regard to the law and with regard to the commission's order, financing order, if issued or when issued. On June 29th, 2025, the commission opened 5 proposals, one of which was from your company, PFM Financial Advisors, LLC. There were 4 others from Atkins Capital Strategies, LLC, Charles River Associates, Hilltop Securities, Inc., and Sabre Partners. These were in response to solicitation number 54-000-28374. Mr. Chairman, the docket is in order, and the commission may continue conducting public interviews of representatives.
Thank you very much. Before we begin with the interview, I will remind everyone that a decision in this matter has not been made by the commission in docket number 2025-65E, even though there was a settlement agreement presented by the parties of record. That record is, of course, closed, but a vote has not been handled yet by the commission. Therefore, I would caution everyone from trying to obtain any indication through questioning on how commissioner or the commissioner would potentially vote or discuss the possible contents of any order. As Ms. Wessinger Hill stated, the purpose of these interviews is related to the 5 responses received by the commission. By state law, the qualified independent third party designated by the commission must act in accordance with the statutory obligations and any additional requirements established by the commission order. The qualified independent third party must independently participate in the pre-bond issuance review process established by the commission pursuant to Section 58-27-1110C2J, has the authority to request and receive all necessary documents, data, and information from the electrical utility to fulfill its responsibilities and ensure compliance with 58-27-1110C6A, and has the ability to communicate directly with the parties to the docket or the proceeding as needed by the qualified independent third party to carry out its duties. The qualified independent third party cannot communicate directly or indirectly with the commission, any commissioners, or any member of the commission staff. This is to prevent any ex parte parte communication which is prohibited by South Carolina Code Section 58-3-260. The qualified independent third party designated by the commission must be able to work independently without involvement by the commission or its staff, and be able to provide independently the conclusions as directed in the financing order and applicable law. The qualified independent third party is limited and can only communicate with the commission, the docket, through the commission's docket management system with a file, letter, or document. Any other means is prohibited by law, including email, telephone calls, text, or any other manner whatsoever. Even though you cannot talk to the commissioner or staff if designated by commission as qualified independent third party, the commission and its staff also cannot talk to you except through orders or filings provided to all parties. All parties must have the opportunity to be in any meeting or conference, and all parties must have the same communications intended for one and provided at the same time. Just like the electrical utility and parties to proceeding, the qualified independent third party makes any docket filing it believes necessary, subject to and in accordance with the Commission's procedural rules and orders. The third-party consultant may be subject to confidentiality agreements and prohibited from divulging certain sensitive information. The Commission has a process whereby confidential information can be provided and protected from public disclosure. The qualified independent third party is subject to the same process as utility and parties whereby confidential information can be provided and protected from public disclosure. The Commission may request that the qualified independent third party participate in a post-pricing meeting, which will include the electrical utility, the qualified independent third party, and all other parties to the docket. Since I have explained and outlined the manner in which the qualified independent third party can communicate with the Commission and its staff, and that is only through communication filed in docket number 2025-65E, there is no need to further address ex parte communications. Gentlemen, I welcome you today and appreciate you being here in person. We realize that being here in person is somewhat of a time-consuming matter. I would ask that we have your answers to our questions, but I would ask that you please introduce yourselves and tell us a little bit about your presentation. Tell us about your background, anything you'd like before we begin any opening statements. These proceedings are being recorded, so it'd be helpful for you to introduce yourself when you speak. So I would ask that you speak up. The floor is yours.
Thank you. We appreciate the opportunity to be before the Public Service Commission of South Carolina. We did put some slides together, and I think we could roll through the first few. It'll give an introduction to our firm and to us as individuals, if that is okay with the chair.
All yours.
Sure. My name is Chris Lover. I'm a managing director of Public Financial Management, or PFM Financial Advisors. In terms of my background, I've been with PFM for 15 years. I've been doing governmental finance work, serving many governmental clients, primarily utilities, for that entire time. Prior to that, I was on active duty with the U.S. Army. My last 10 years in the Army, I was a budget analyst at the Pentagon, working primarily infrastructure and utilities. One of my major projects was trying to move the Marines out of Japan to Guam. I think they're still working on it, so I don't really call that a success. But still, it was just part of my background. Just prior to that, I was a teacher at West Point, and I taught economics, finance, accounting, corporate finance, among other things. So that's a bit of my background. The one other thing is my drive is about 90 minutes. I'm a new resident of the Palmetto State, and I live in Greenville, South Carolina, which is the first time I think I've said that outside of a visit to my mom. I'm going to join by two of my colleagues, John Murphy to my right. I'll ask him to introduce himself, and then we'll turn it over to Mike Mace, who's in New York right now.
Good afternoon. My name is John Murphy. I am the PFM's Director of Investor Relations. I've been at PFM for about 5.5 years. I work predominantly on the investor relations front with investors, but I also contribute into the public power team, our restructuring, debt restructuring team, and our private placement high yield issuance teams. Prior to joining PFM, I was I thought it was, oops, my bad. Shall I go again? Okay, that's fine. Sorry about that. Usually there's some technical difficulty when I'm involved, but so prior to joining PFM, I spent 20 years at Fidelity Investments, where I was a corporate bond and municipal bond trader, as well as a municipal and corporate credit analyst, also covering the securitization world for bond utilities, utility securitizations. Prior to that, I was at JP Morgan trading municipal bonds and default swaps and credit swaps and other derivatives. Prior to that, my education is I have a Master's of Science in Banking and Money Management from Adelphi University on Long Island, and Baruch College in New York City is my where I did my undergrad. Happy to be here today. Mike?
Sure. Hello, my name is Michael Mace. I've been in the financial industry for over 40 years now. I spent the first 20 years of my career working at a couple of different investment banks, major Wall Street banks, working in utility finance. And since 2001, I've worked at PFM Financial Advisors exclusively in the area of governmental and not-for-profit utilities, advising them on developing and implementing financing plans. I have really dedicated my career exclusively to working with governmental and not-for-profit utilities, which is also true of the rest of us on this team. And another point is that PFM and those of us working on this transaction, none of us have ever worked for an investor-owned utility or taken compensation from an investor-owned utility, and we have never worked with investment banks in our role as financial advisors and never taken compensation from investment banks. Personally, I've worked with some of the largest governmentally owned utilities in the nation. I work with Santee Cooper, but I have not worked with them on any matters that have come before the Public Service Commission. Today, I'm in New York working on a bond financing for Bonneville Power Administration, a federal government power marketing agency. That transaction has some parallels to the transaction that is proposed for the securitization. It's a rather unique transaction, a taxable transaction, a maturity structure that's fairly similar to what we see in securitizations. And it's a very unique credit structure for a federal power marketing agency that requires some hand-holding and some explanation to investors, much as the securitization credits do. And so with that, I think I'll let my colleagues get started on the rest of the presentation.
Thank you, Mike. So it's our goal that by the end of our discussion here today that at least we get the point across that PFM is dedicated to the governmental and non-for-profit space. We are dedicated to the utility sector. We have a dedicated team. I think there's close to 80 to 100 years of experience between us, the three of us who are sitting before you. And I think we're the right team and people to perform this function as the independent third party for the PSC. Our slide here talks about our dedication to supporting our governmental clients. Our firm wasn't born yesterday. We've been around for over 50 years, or actually 50 years. It is our anniversary year this year, and we're the #1 ranked governmental financial advisor in the U.S. We have quite a bit of experience. If you look at the lower left-hand side, you can see a rank chart from 2024, and you can see PFM is #1 compared to a lot of the other financial advisors in terms of par and transactions that are brought to market. If you look to the right-hand side with the map of the United States, you can see we're kind of all over the place, and where you don't see dots, well, we also support some of those states and those governmental and non-for-profit entities. So what that gives to the PSC is quite a bit of breadth and depth of experience and knowledge of what's going on not only in the Southeast, but also, as Mike's doing today, the Pacific Northwest. We are a fiduciary, so we serve in your interest. And as Mike alluded to, we do not work with investor-owned utilities. And likewise, we haven't accepted any compensation. As a fiduciary to our clients and as a registered SEC and MSRB entity, we have to provide a disclosure of conflicts, which we did include in our RFP submission to the PSC. And we feel we're ready, willing, and able to work on this transaction as soon as we're given the green light. On our next slide, we have a dedicated utilities team within PFM. So PFM has over 300 employees, and you can see all the folks who are listed here are dedicated to the utility sector. So we have quite a handful of folks with quite a few different expertise and specialties amongst them. And when you go to our next slide, we've taken some of the more senior folks for this team here, myself, Mike Mace, and John Murphy. There you can see some of our educational experience and some of our certifications. We are registered advisors with the SEC and MSRB, so Series 50 and Series 54. And a couple other interesting notes there, as you could see the breadth of clients we work with. For example, the first one for me, PGW, Philadelphia Gas. I'm supporting them on a rate case with the Pennsylvania Public Utility Commission as we speak. And then for Mike and John, they've worked on the utility securitizations with Long Island Power Authority, kind of doing business with their special purpose entity, utility debt securitization agency. And John's also worked with North Carolina on their securitizations as well as Indiana. So we have had, again, a firm dedicated to the non-governmental and non-for-profit space, a dedicated utility team, and within that utility team, some of the most senior folks on it. And our next slide. We also have, just up the road in Charlotte, a pricing group. So what our pricing group does is they work with all of our clients, our client base, not just utilities, and they help determine how those bonds should price in the marketplace. What is the spread to the AAA benchmark, and why is it at the case? Why is it that spread versus any other spread? So they've developed some very sophisticated modeling. They could price all sorts of debt, and what that helps do is figure out a very sound structure which appeals not only to the economics of the lowest cost of debt, but also to the investor preferences. If you look on the lower right-hand side, we've compared ourselves in this case to the largest Wall Street investment banks. And as you can see, we price more transactions in the marketplace than even, say, a Bank of America or a JP Morgan and Goldman Sachs. So we're very active in the marketplace. On average, I think we're doing about 10 to 15 transactions a week. And that really provides you one great asset, which is asymmetric information and the ability to understand every single transaction, what different structures means to different groups of investors, and how those bonds should price. Again, given that information, we can drive those spreads to the benchmark as low as possible, which directly translates to a debt service cost.
And hopefully all this experience gives you the comfort that knowing that you have folks that are dedicated to what we're doing, but also understanding each one of the markets and how we're going to be driving things for the ratepayers of South Carolina.
Mr. Chair.
Vice Chair Williams.
Thank you, sir. Gentlemen, I have a quick question for you based on this portion of your presentation. So I see that you do not underwrite bonds.
Correct.
Right. And just, I want to get a feel for what gives you the confidence to know that you're going to get the pricing right compared to maybe some of your competitors who may have experience underwriting bonds and have experience with potential buyers, if you will, to ensure that the underwriters are doing their due diligence to get the best deal, anecdotally, if you will, deal for the ratepayer.
Okay, I'll take the first part of the question, and maybe I'll turn it over to John and Mike for any other thing they would like to add. I think by not holding a position, that means we are free from conflicts. And we represent your interest, the interests of the ratepayers here in South Carolina. If I'm a bank and I am going to underwrite part of a transaction because there's a lack of demand, that means I typically have to have a higher yield on those bonds in order to bring those into the inventory of the bank and then work them off over time. So that higher yield translates to higher debt costs. Okay, so since we don't have that conflict, we can say this is a fair yield given these market conditions. So we think by not holding inventory, it makes us more of a fiduciary to entities such as yourself, the Public Service Commission.
And from our pricing side, when I look at the amount of deals that we're pricing every day and in the market all the time, that's a bevy of information that we get to use to help when we're making the decisions whether this should be 2 or 3 tighter based on where recent deals have come in the marketplace. So you having good comps for it is key. So underwriters are going to come out when they bring a book and it's going to say, here are the 3 or 4 comps that we're going to push this, market this deal with. We already know that. We already have the basis and knowledge of where this thing should trade and what it should comp to. So understanding your deal, understanding where deals are pricing around you is what our pricing group does. We are talking with the underwriters and in the process, and Mike is doing this right now, of making sure that when this comes to market, we know what the spreads are. We're not dictating them. We're letting the underwriters call their market, but we're holding their feet to the fire if we know more than they do on current market conditions. And that's been the case a lot in the recent market, and at least in the municipal market from that standpoint. The other part of it is knowing the investors in this space. And as head of investor relations, we have for all our clients that we work with, we have the buyer base of who's involved in those deals. So understanding who's showing up, who's downloading the materials, who's actively involved and engaged from prior deals that are similar deals and comp deals, then we can make sure that that group of buyers is going to be, showing up to our deal, to the South Carolina deal.
Thank you, gentlemen. That's all I have, Mr. Chair.
Thank you, Vice Chair. Any other questions at this time? You want to proceed? Go ahead.
Just
Commissioner Cass?
thank you. PFM, you guys understand that I guess what you will be doing will be alongside the evidence of other parties and entities. You're not advising us. You're going to be providing information along those lines. Is that your clear understanding?
Correct.
And without divulging any confidential information, the financing order will be coming out pretty soon. So that wouldn't be your role or any of that information. Is that
Correct.
understood or clear?
Yep. And our capacity in the past, that is how we've acted. Once after the financing order has been delivered, that's when we've been engaged with both the North Carolina Commission and also the Indiana Commission as well. But the difference in those 2 cases, we did advise the commission themselves on the process and, setting up processes throughout the whole transaction in the market period that, we did have contact with them. This would be a different case in the sense that outside of the putting it through the document management system, there would be no. And, just knowing that you have to trust us and have faith in us and our fiduciary duty to make sure that we're doing our job is what we're here for.
I understand. This has nothing to do with any of this stuff, but you drive up I-85 every day to Charlotte from Greenville?
No. I work from home essentially, so I'm using the GSP airport.
Okay, I was going to say, you're a better man than me. Thank you.
Thank you, Commissioner Cass.
Okay, so we do have a few more slides that we can quickly roll through, and this is really kind of a case study of how we've done securitization transactions for other entities throughout the U.S. So this is Long Island Power Authority, and I'll turn this over to Mike Mace to talk through this one.
Sure. We serve as the financial advisor to Long Island Power Authority and also to the special purpose entity created by state legislation, their Utility Debt Securitization Authority. We've worked with Long Island Power Authority since 2008. In 2011, there was Superstorm Sandy, which caused a couple of $1 billion worth of damage to the Long Island Power Authority system and also damage to their credit rating and credit standing. So the state passed legislation to provide them with the ability to sell, at that point, roughly $4 billion of securitization debt, which they have since increased to $8 billion. I think, and they have now sold $6.3 billion in several separate financings, and we're working on another transaction that will be brought this year. I think the unique part about this Long Island Power Authority is that we serve as financial advisor to basically all the parties involved in the transaction. And I think if you ever saw that in the context of an investor-owned utility transaction, you would feel, and probably rightly so, that there were some conflicts inherent in that situation. But since the Long Island Power Authority is a not-for-profit entity that serves all the customers on Long Island, that really their duty is first and foremost to the ratepayer and everybody involved in the transaction, the management of the utility itself, the board of the authority, and the Utility Debt Securitization Authority and its board all have one singular goal, which is to produce the best possible outcome and lowest rates for their consumers. There is no conflicting interest in this case, for example, between the consumer, the customer, and the shareholder. There are no shareholders of LIPA. So that's a unique transaction where we're fully involved in every aspect of the transaction, in the selection of bankers, in the marketing, in the credit rating process, in the transaction execution, and in squeezing, as we call it, that last basis point or last fraction of a percent of an interest rate out of that transaction to make it the best possible transaction for the utility customers. And part of the certification of financial advisors or qualified independent third parties for the utility debt transactions is to be able to certify that, subject and under the current market conditions, you've gotten the best possible deal for the customer. And that's pretty much what PFM does in every single government or not-for-profit utility transaction. It's just that we don't have to do a formal certification. We have probably less formal certifications and opinions that we deliver with most of those other transactions, but still the goal in everything we do, the lowest possible cost outcome for the consumer.
And I'll take this. I was the lead on our advising of the Indiana Utility Regulatory Commission on their securitization with CGCO. And this was a process where we were brought in. I was advising or co-advising the Indiana Finance Authority on their energy 21st Century Energy Commission with the legislature, and having conversations with them. And then when their financing order came through, a bond team was put together, and through a memorandum of understanding, we were taken. Our relationship with the IFA was moved over and we were part of the bond team and advisor on the bond team for the commission and working with staff. That was a unique transaction in the sense it was the first one in Indiana, and making sure that the commission understood, the commissioners understood, but the staff understood and was able to relay this was part of what we did on the process. And, Mike talked about LIPA setting up and being part and parcel of that whole thing on the advisory side. For the RURC, this was a new space, this was a new relationship, so we wanted to make sure that we established a procedure of going through to what they can expect at each step of the way, and then having conversations before and after each one of the bond team meetings to make sure that everyone understood what was communicated in the meetings, and if they had any concerns, that we can voice their concerns or they can voice their concerns at the next meeting to make sure that the process went as smoothly as possible. And documented throughout the whole period of time. We had reports to the bond team, to the commission and the staff. So there was no hiding of anything that were to happen where the financing order comes and then you go to market. It was fully explored and developed and reported throughout that process. It ended up in savings for the ratepayers. And that was proven, and we were matching our models. We're matching with what the underwriters were providing us and the bankers were providing us. So knowing that whatever models they had, we were comparing and actually making suggestions that if there are certain things in the model that could be better, we did. But knowing that we have that ability, we have those capabilities in our quant group and our structuring teams to make sure that whatever's happening on the underwriting and banking side, that we're verifying all those numbers to make sure that they lead to the savings that are represented by the company and by the underwriters.
And our next case study talks about North Carolina. And John, you want to take that first and then hand it over to Mike?
Sure. This was another case as well where, as I mentioned, we were brought in after the financing order was issued. We were brought into the team. We had direct contact with the commissioners in setting up the bond team, representing and having conversations, just like in Indiana, before and after. And any questions that were to come through, we were able to have open lines of communication with the commissioners in that forum. Mike, do you want to take the rest?
Sure, John. I think in the North Carolina case, it was their initial securitization, the responsibilities and the output of the process, the certification, seemed to be very similar to what would be required for South Carolina. As John pointed out, it would be some pretty different ground rules in terms of the communication and the process. In your case, communicating exclusively through the docket. We don't anticipate that being a problem. We think that the work to be done, the scope to be done, is quite similar to what we did in North Carolina, and I think quite successfully there.
Mr. Chairman,
Commissioner Wilson.
gentlemen, how are you today? Thank you for being here. I just have a question about the North Carolina letter. I see that it looks like it's goes for more than one page. Would this be considered a qualified opinion letter?
It was Mike, you want to take that? I'm thinking about it from an accounting standpoint, qualified versus unqualified opinion.
No, I don't think it would be considered a qualified opinion. That's one of the things when we have delivered our opinions and certifications in these things, we've never requested they be kept confidential. We're always very clear in the opinion that's been given. We'd certainly be happy to provide a full version of that opinion.
Okay. Thank you very much. Thank you, Mr. Chairman.
Thank you.
And ma'am, likewise on the previous slide, we have the other opinion for the Indiana case. If you'd like to see that,
Yeah,
too.
that was the full bond report that we submitted with the staff.
We just put a screenshot of it so you could tell.
The full report was in the initial submittal.
Yep,
The full letter was in the initial submittal from Indiana.
correct.
Okay, thank you.
We have a couple more slides here where there are some of the technical questions, I'll call it, and what we've done is we've attempted to answer these. These were, I think we have 6 of these slides here that go through and answer some of the questions pretty directly that were sent to PFM last week. I don't know if it's helpful to go line by line through these, but we can if you'd like. I think on question number 2 here, the work that we've done with North Carolina, the work we've done with Indiana, kind of illustrate that we can provide this type of an opinion. We know what's expected, what's comprised in it, and we can deliver it.
And I think to one of the questions that I think that Duke had submitted on this is that the certification or the deeming of securitization bonds to be asset-backed securities and ABS. That's an interesting one from a standpoint of the market has been, as it's developed over the last 15, 20 years, it's been both corporate and both ABS, and how you apply to the SEC for your registration would determine who the buyers are going to be and what your buyer base is going to be. Having these being determined as ABS, I don't think hurts in the marketing of the bonds, and we can talk to the underwriters and they can speak to this, but also the size of that market is large enough that any type of utility securitization, and being that's such a small part of the overall market, that there'll be plenty of demand for this type of paper for utility securitizations. There has been in the past, and it is a nice diversifier in the ABS space as opposed to just auto loans, credit cards, and floor plan stuff.
I think in terms of the numbers of transactions we've done, if you just look over the time period requested, I think we're down to 5 transactions. Some of the earlier LIPA transactions don't fall in there. Likewise, when you look at PFM as a whole, we've done securitizations for tobacco, and those started in the 90s. So when you think about it from that standpoint, we've been in the securitization business for close to 30 years with kind of a shift into the utility space most recently. For the certification, we feel we can provide this certification. I think, as Mike alluded to, we typically find opinions and fairness memos on a fairly routine basis for virtually every transaction we do back to our governmental clients. So we don't feel we'd have any cause for concern in this circumstance.
Yeah, because this opinion is actually formed over the whole period of the pricing, so it's not just that one day and then you're rushing to put it all together. This is the work of the whole time period of the marketing and the pricing of the debt. So it's the culmination of such, and within 1 day business days is not an issue.
And then there were some questions from Duke here that I thought we put in here. I don't know if folks would like to hear it, but in general, we don't foresee any issues. Again, John discussed the idea of ABS securities and what the implications are in terms of buyer base. One of their other questions was confidentiality, abiding by the confidentiality. Again, we're a fiduciary to all of our clients, and we're very frequently familiar with this type of relationship and what it means to have that type of confidentiality agreement in place. This is, again, just the 5 years of the securitization information. So it's we're down to 5 transactions across UDSA as well as North Carolina and Indiana. I think their last question, have we ever declined to provide a certification? And the answer is no. We've met all the requirements in terms of information and timeliness.
And one would think to that question too is you make sure that through that whole process, if there's any objections, you're objecting to it. So at the end, you come out with the right solution and the lowest cost solution for the ratepayers, and making sure you handle those discrepancies, or if you have any concerns through the process, and making sure it's known then. It's what we're involved with.
All right. Any further, Commissioner Bells?
Thank you. Gentlemen, I just want to point something out. You've made part of your presentation. You've indicated that you've never been paid by investor-owned utility for the work you provide. That you stick to the nonprofit and governmental area. If whoever the QITP, I always have to think about the order there, is they end up being paid by Duke. That's the cost for the commission's consultant is rolled into the finance, or the cost of the bonds and the financing costs. Is that going to present a problem?
No, that is not a problem. I think when we talk about not being paid by investor-owned utilities or deriving compensation, it's just they are not selecting us. It's not coming out of their shareholder dollars.
They're not your client. Is that what is that the main thing?
Exactly.
Okay.
Exactly.
I know that's a little quirk. I don't know how these are done in other states. I know that's how it is here. And I just, you seem to be in a niche area and you're proud of that. And I can understand that. I just want you to be aware of that.
In the Indiana case, we were paid from the IURC budget, not from the sale and the commission. From the process.
I just want you to be aware of that.
Understood.
Thank you.
Okay, thank you.
Thank you, Commissioner Belcher. Any further commissioner questions? Hearing none, gentlemen, thank Commissioner
Thank
Williams.
you.
I'm slow on the draw. A basic fundamental part of this work is the statute requires that we be confident that this is the lowest possible cost to the customer. You've talked about pieces and parts of it, but could you answer how you will invoke that confidence to us?
Sure. I'll start. Again, this is Chris Lover. When we talk about costs, I think for the one thing that comes to mind primarily is how did the bonds price in terms of a spread to the benchmark. And we, again, have a pricing group dedicated to pricing bonds, taxable and tax exempt, for our entire client base. So that informational database that they have in real time helps us say, this is how these bonds should price. And this is what we feel the spread to that benchmark is. And that is directly impacting your total debt service costs, which directly impacts the ratepayers. So that's one thing. I would say when you think about the ancillary services and the costs that are embedded in the transaction, we have some knowledge, with all the other transactions we do of what's a fair, call it a takedown for a bond transaction. We know kind of lawyer fees and things like that. So some other costs that might be associated with getting these bonds to market. So we could provide, I'll call it a sniff test to some of those. But I think the big aspect of it is how do the bonds price in the market on that day, and what was the yields and that spread to the benchmark on that. And John, I don't know if you have anything to add, but.
Yes, John Murphy. The one thing I would add to that is being involved in the processing and on the bond team and being part of the underwriting and picking of the underwriters and who your team is, to making sure that they are the best team for this particular transaction, whether it be one of the larger ones or some smaller firm with a niche that can prove that they have the capability to do these things. That is also what we bring to bear, to making sure that they're financially sound, but that what they bring to the table is going to help the transaction and be the best underwriter for the process for your deal.
Mike, anything to add?
I'll briefly say, the question would be, does PFM know securitization? I think the answer to that is yes. We've worked on major securitization programs for some very high-profile issuers. Do we know the bond markets? Our group within PFM, I think last year it was almost $90 billion of debt that we worked on, where we're going through a similar process as to what we would be doing here, is to making sure we have the right people, making sure we're conducting the process in the right way, investigating every bit of potential investor demand out there and marketing it properly. And then once you've done that and you have an order book and you have investors in the book, is to really trying to squeeze that last basis point out of that investor order book, or out of the potential demand that you have. And I think when we work with underwriters and do this process, there's a lot of times that we're in that negotiating process and we'll hear, well, it's just a basis point. It's just the difference between 6% and 6.01. I think when we hear that, we say, well, if it's just a basis point and they're being thrown about freely, well, we'll take as many of them as an underwriter will give us, or as an investor will give us. So I think we are skilled, experienced in the major aspects of this project, and it is just part of the fabric of what PFM does, why the firm was created, and what we do every day to get the best possible transaction for the benefit of our clients and their constituents.
Thank you, gentlemen. I appreciate the answers.
Thank you, Commissioner Williams. Any further commissioner questions? Hearing none, thank you, gentlemen, for being here, both virtually and in person. We have copies of what you presented. You've made a good presentation. We hope to be moving on this in the next couple of weeks, on all our decisions involving this, and look forward to reviewing what you've submitted, and hope you have safe travels.
Thank you for your time today. Appreciate it.
Thank you. We're in recess until 3:00.